Good day and welcome to the Agarwal Industrial Corporation Limited Q2 and H1 FY2024 earnings conference call hosted by HAM Securities. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ramadhan Rane from HAM Securities. Thank you, and over to you, sir.
Thank you, Dorwin. A very good afternoon, ladies and gentlemen. Thank you for joining the Agarwal Industrial Corporation Limited Q2 and H1 FY24 earnings call. Joining us on the call today from the management team is Mr. Vipin Agarwal, Chief Financial Officer. We will commence the call with the opening thoughts from the management, post which we will open the forum for Q&A session, where the management will be glad to respond to any queries that you may have. A brief introduction for the benefit of our participants. Agarwal Industrial Corporation is India's largest private sector bitumen logistics company. As published on the screener website, the market cap of the company is at rupees 1,392 crores with a PE multiple of 14.3 and the current share price is rupees 930. Before we go on the main call, I would like to read the standard disclaimer. There may be forward-looking statements about the company and the subsidiaries which are based on the beliefs and opinions and expectations of the company's management as on date of this call. The company do not assume any obligations to update their forward-looking statements if these beliefs, opinions, expectations or other circumstances should change. These statements are not guarantee of future performance and involve risks and uncertainties that are difficult to predict. Consequently, listeners should not place any undue reliance on such forward-looking statements. With this, I will hand over the call to Mr. Vipin Agarwal, Chief Financial Officer, to take it forward. Over to you, sir.
Good evening to all and a very warm welcome to everyone who has joined us today. And I take the pleasure of welcoming you all to the Q2 H1 FY24 earnings conference call of Agarwal Industrial Corporation Limited. Let me start by giving you a brief overview of the company's business and will then take you through the financials and will then be happy to take questions if you have any. At the outset, we are pleased to inform that we have reported healthy numbers in terms of top line, operating profit and bottom line in Q2 H1 FY24. This we are able to achieve on back of strong volume growth since we have crossed total volume of 1,79,032 metric tons in H1 FY24 as compared to our 1,57,200 metric tons in H1 FY23, thus registering a strong rise of 13.88% on a year-on basis. Agarwal Industrial Corporation is an integrated bitumen logistics and ancillary company. It plays a prominent role right from sourcing of bitumen to ocean transport, to storage, to value addition in the product and manufacturing, to transporting that product to the final plants of the consumer, and finally laying on the road by our customers. With a vast setup at our end and being fully integrated, we believe that there are high entry barriers to the industry. We have informed in the past years, and again we would like to highlight that there has been an increment growth in our operating profit and due to onboarding of new bitumen vessels. This is a part of the company's strategy to secure timely availability of vessels for meeting the incremental demands that are prevailing in India. We want to bring to your kind notice that the total volume of approximately 1,80,000 tons in the first half of FY24, we have done close to 60,000 metric tons of volume through our own vessels. And we have added one more vessel in this first half of this financial year. That brings us to the total number of 9 vessels, and the 9 vessels is under dry dock and doing the maintenance work. I would highlight some of other points that I would like to all my shareholders to know that year on year the company has been giving a good return on the capital, and the company's profit on per metric ton has also improved in the last few years. the payment cycle of the company compared to what 5 years back, it has improved by a significant level. And the company maintains a guidance to target 5 lakh metric tons compared to 4,25,000 metric tons in the previous year, which we had a target growth of around 18%. Also, India being the second largest food network and has the lowest consumption of bitumen as compared to countries like USA, China, wherein for the same road transport requirement of bitumen is 3x, thereby providing a large opportunities in Indian market. This year, budget allocation of the road transport and highway ministry is rising. This year, road transport and highway ministry has achieved a push with the union budget raising the allocation by 36% to around 2.7 lakh crores for 23-24. That is nearly a 10% jump over the budgetary allocation of INR 1.99 lakh crore made in the budget of 2022-23. Higher budget allocation was necessary to help the ministry meet the 25,000 kilometer road development target announced by the government in the year 2022-23. Budget remains raising interest expenses and increasing land acquisition costs. This, along with the large quantum of maintenance work awarded by government and other agencies, is creating continuous growth demand for the bitumen. We believe that we continue to grow in coming years, and for 2024 we are expecting to grow at the same pace as in FY23. We will be efficiently utilizing our capital, providing more vessels, thus strengthening and smoothing the overall business of the company. I would like to take you to the financials. We are happy to report that AISL has continued to demonstrate phenomenal results in Q2 FY24 as well as Q2 FY24. Coming to the quarterly results, during Q2 FY24, we have reported a 4.18 jump in the consolidated revenue from operations at INR 231.91 crores on a year-on-year basis. Our EBITDA has increased by 12.17 at INR 28.68 crores, and we have reported a PAT of INR 16.01 crores with an increase of 4.77 during Q2 FY24 as compared to Q2 FY23. However, on a half-yearly basis, the company has reported a 7.13 rise in total revenue at INR 860.67 crores in H1 FY24 as compared to INR 809.99 crores in H1 FY23. The company has reported a 14.99 rise in EBITDA at INR 70.79 crores in H1 FY24 versus INR 61.57 crores in H1 FY23. Company's first half-1 FY24 PAT surged by 12.49% from INR 38.74 crores in H1 FY23 to INR 43.58 crores in FY24. We are seeing a constant witness rise in the return of capital from 14.65% in FY19 to approximately 24% in FY23. I would now ask the coordinator to take the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, you may press star and 1 if you wish to ask a question. The first question is from the line of Ashish Kacholia from Lucky Investment Managers. Please go ahead.
Good afternoon, sir, and to the entire Agarwal Industries Corporation team, and congratulations on a good set of numbers. Sir, my question is basically, what is your observation about our company's ability to take market share in the entire bitumen supply chain? Are we being able to kind of increase our market share over a period of time, or we are finding competition also responding, So just your thoughts.
Thank you so much. As I have already spoken earlier, we have been witnessing a constant growth in the last few years. And on the same, if we consider same level from last year, we had done around 4,25,000 tons and the target of 5 lakh tons this year. And we hope that we will definitely reach this target. This will result in an overall increase around 18 to 20%. And going forward, the company will try to maintain the same levels in the growth, in fact higher, because as I have already said, the demand in this roads industry is so vast that even in the next 10 years, the demand for bitumen would keep on increasing against the local production. The Indian production of the PSUs will limit themselves to 5.5 million tons, as they do not have any more capacity to increase the production in India. So entire value chain of the additional quantity that would be required to make roads, it would definitely be contributed through imports only. And therefore, we have already set up the logistics across the Indian ports and various factories wherein we would be able to supply across all the Indian states in a very effective manner, thereby increasing the company's total volume to a significant level in the coming years. And with the improved efficiency of our vessels, we would definitely add something on the bottom side as well.
Yeah, so the question basically is that since we have already captured a 25 to 30% share of the bulk market in the bitumen in the private sector, is there scope for us to take our market share even higher?
Yes. If you say that the volume will be increasing, but of course any additional volume would definitely be helping the company in a higher volume from the current level.
Got it, sir. Thank you.
As the Indian demand in the next 2 to 3 years, it should come cross 12 million tons. And the additional volume will be supplied by the companies who have this kind of setup as we have in our company. The infrastructure setup with the logistics that we have in-house.
Got it, boss. Thank you so much. And all the very best.
Thank you so much.
Thank you. Participants, if you wish to ask a question, you may please press star and 1. The next question is from the line of Bhaumik Shah, an individual investor. Please go ahead.
Hi. Hello.
Hey, good evening.
Hi, good evening. How are you?
I'm good, sir. How are you?
Great. I'm very well. Sir, can you just throw some light on actually for coming 2 quarters? Can you give some guidance on in terms of volume growth, revenue growth, and also the effect of its effect on our bottom line actually? Because with the increased efficiency, since we have added the vessels and all, and with the increased efficiencies and all, we can see that the PNs have started improving actually in our company. So can you just throw some light on the volumes which will be there for the next 2 quarters and resulting into the revenue growth and resulting into the bottom line growth actually for the coming 2 quarters and the coming years, 1 year also?
Yeah, as you are aware, the Q4 of the financial year is the peak season that the company achieves the highest sales. Considering the first half, we have done around 1,80,000 tons. We have a target to achieve more than 3 lakh tons in the next 6 months of the second half, thereby taking the volumes to nearly 5 lakh tons that the company has targeted, with an improved fact in terms of per metric ton, which would be higher in comparison to the last year. So last year it was around 2,200 per metric ton, which would result in nearly 2,300 to 2,400 in the entire coming year on a per ton basis.
Okay.
And volume-wise, of course, about 18 to 20% would be the increase in the volumes.
Okay. Also, one more thing actually, I think in one of the Concalls, you had told that actually currently we'll be handling the 5 lakh metric ton capacity, which is equivalent to the capacity of one of the refineries actually.
Yes.
So do you see the scope actually that we'll be able to do the volume growth in the coming years as well actually? Will not our
Definitely. See, one of the PSUs is having around 6 lakh tons of production in Mumbai.
Correct.
So we are targeting a volume near to that refinery in the coming next few years. So if we are able to achieve 5 lakh tons in this financial year, we would be closer to achieving that target of 6 lakh tons in the coming next year.
Correct. So with the increase in our fleet size and all, vessels and all, we'll be able to increase the volumes, right? That will not be a challenge for us to grow.
With the increase in capex of in the vessel size, we would increase both the volume and the bottom line by 25% in any additional vessel that we take in.
Correct. And you see the
we would be the more vessels that we would be having at our end, we would be able to bring more volume in Indian various states.
Correct. And the demand side, and on the front of demand side, you are seeing that it is increasing only, right? I think you told that
there's absolutely no issues in the demand side because the road network is such as of now in India. Even any maintenance job, if they take up, the requirement will always be more than what the current levels are.
Correct. And the new roads are increasingly been built actually. That's what we see in the news actually.
Yes. New roads first are always, that is the target of the government, 25,000 kilometers.
Correct. 20,000 kilometers. Yes.
And plus,
so that shouldn't be a challenge for the demand side, right? Demand is always there actually. It's increasing only. So in the increasing trend.
There actually is no substitute for bitumen.
Correct.
Any additional network that the government is focusing on, it has to be supported by a supply of bitumen. Otherwise, roads will not be able to be made.
Correct.
And highways are all 4-way highways are being built to 6 ways, and 6 ways are being built to 8 ways.
Correct. No, that we are seeing in the news every day actually. So we are aware about it. So only thing is that, we'll be able to cope up with the increased volumes and all. So that also
that is one of the reasons that the company has gone into backward and forward
integration
strategies, wherein we are supporting each supply chain that is required in the supply of bitumen. So that's the reason we are having our own storage in India, logistics supply, land, as well as water, and procuring the product from the source of origin.
Correct.
This not only helps in increasing more volumes, but even incremental and operational efficiency in terms of bottom line.
Correct. Thank you so much.
Thank you, sir.
Thank you. The next question is from the line of Yash Kukreja from Equity Capital. Please go ahead.
Yeah. Thank you so much for the opportunity, sir. So my question is on the demand side only. So, sir, as in 2017, Bharatmala 1 had a target of 35,000 kilometers. So out of which 26,000 kilometers has already been done. And so basically, though it was done at the twice the cost, so ministry has ordered road ministry to not apply for like more 8,000 kilometers. So, sir, on the demand, do you still see the demand like we are saying 5 lakh tons for this financial year? Is it possible?
Yeah, we have very much possible. We are already on the 50% of what we have done last year.
Yeah.
Easily. This volume is easily achievable. At least, if not 5 lakh tons, 4,90,000 tons or somewhere near, it is easily achievable.
Okay. And so my second question, sorry?
The peak season that will start of November, December, Jan, Feb, March. These are the peak season, and we believe that with the coming of the elections next year in 24, there would be increased demand. In fact, and there has been more demand even from the NHI for imports now.
Okay, got it. Sir, and my second question is regarding the cost of the vessel. So could you please just ask about the cost of the vessel?
The 9 vessels we have procured, and the total capex would be around 60 crores for this vessel.
60 crores.
Yeah, it would be around 60 crores.
Okay. So any guidance for the capex for 25, financial year 25?
On volume?
No, capex side. Any guidance on capex?
As I had discussed in the previous Concall also, and even in few minutes back, we always, the more number of vessels that we would be having, it would help us not only in procuring more bitumen, but also on the bottom line by giving us increased margin. So whatever $15 I had given an example in the last Concall, $15 per metric ton that we are paying to any third party to bring the product through any other supplier into India, that is a outgo from Indian pocket. So the more quantity there would be, we will be able to bring in through our own vessels. We would say $15.
Got it. That's it from my side. Thank you.
Thank you so much.
Thank you. We have the next question from the line of Pritesh Chedda from Lucky Investment Managers. Please go ahead.
Yes, sir. Just one question from a slide 9, where you have given the cumulative capacity of the ships. So there was 48,000 capacity in 23 and 54,000 ton capacity in 24, which is added for 9 ships. Now, there was a lot of ships which were added last year during the year, so you wouldn't have got the full year's utilization, right?
Yes.
So the question is, just a simple question, that if you have this 54,000 capacity, what kind of volumes you can internally handle by this capacity of ships?
We should be able to handle around 250,000 tons to 3 lakh tons with this capacity.
With this capacity?
Yes.
So if you are doing a volume of, let's say, 5 lakh ton in FY24,
yeah.
So theoretically half of that volume you can move to your ships if you had got the ships for the full year.
Yes.
Okay. Now,
And one more point I would like to add here: the vessels that goes into the eastern side of India, it requires around 35 days to complete one voyage. So any vessel that would go to the eastern side, the cycle of that vessel, that voyage would be higher than compared to the vessel that comes into the western side of India. Thereby cutting the total volume in the manner that we want to achieve through our own vessels.
Okay. And when you...
just to give you an example, from 5 lakh tons, if suppose we have to supply around 50 to 70,000 tons in the eastern side, so that vessel, you require more vessels to complete that voyage instead of the vessels that you would do in the western side.
Right. So any case, it would be an optimum mix of going east, going west. So that, considering that you need to supply bitumen everywhere, on this 54,000 ton, you can support the 2.5 to 3 lakh ton?
Yes, we should be able to support.
Right. So basically, whatever is your capacity, you can rotate that capacity 6 times, right? 5.5 times. Because 3 lakh divided by 54,000.
Yes, sir.
Right. And the last vessel that you added is about 6,000 tons.
Around 5,500 tons carrying capacity, about.
So we can do 5,500 into 5.5 tons, right?
Yes.
Okay. And the cost of that vessel you paid is about 60 crores.
Around 60 crores. Yeah, around 60 crores.
Any vessel that you add, usually you have a payback in mind?
We do have payment in mind, but as we had informed earlier also, we have targeted a return of between 20 to 25% in any vessel that we take, so around 4 years payback.
Okay. Thank you very much. Just lastly, you would go to 100% of your volumes via your own vessel, or you will have a mix of outsourced and own?
We would like to have mixed, because during the monsoons it is not possible for us to run the vessels in the Indian continent fully. So during the monsoon, suppose if you consider second half of June till maybe September or October first half, depending upon the monsoons, we have to run the vessels in other areas as well. Because in India, during the monsoon, the demand of the pace of work is not there because of the monsoon.
Okay. So is this optimum?
We have to run the vessels in an optimization manner wherein we can use it in any part, UAE, other Southeastern countries, Singapore.
Okay. So at 50 or 60% of your volumes being through your own vessel now, is this an optimum mix, or you aspire to increase this even further based on?
We aspire to increase it further. We do aspire it.
But not 100%.
Sorry, sir?
But not 100%. Higher than 50% what it is today.
100%, sir, it would not be possible practically because of the monsoon, as I explained. Okay. If we have 1 lakh tons capacity, but 1 lakh tons you will not be able to do during the monsoons.
So what is that optimum on your captive? 60%, 70,
about
75?
70. You can say about 60, anywhere between 60 to 75, 78%.
Okay. Thank you very much, sir. Thank you.
Thank you very much, sir.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. The next question is from the line of Divya Sethi from Electrum Portfolio Managers Limited. Please go ahead.
Oh, hi, sir. Congratulations on this amazing set of numbers, firstly. My question was, like you just mentioned, that the 9th vessel has been added. However, in the beginning, you said it's under maintenance. So has it already started contributing, or what is the split going to be for H2 FY24?
It would be operational in first week of December.
Okay. So it has been
2 months in the current financial year.
Understood. And apart from 60 crores that we've invested in this vessel, is there any other capex that we intend to do during this year?
It all depends upon opportunity that we come across. If there is any good opportunity where we get a vessel at a very attractive price, and at the same time we have the funds at the disposal to take it over, maybe yes.
Okay. And any guidance on FY25, or is it standard the way you mentioned in the past calls that it's going to be around 15 to 20?
It is very easy. The vessel, if you see today's market, the vessel market is on the higher side. So any vessel that we would take now, it would be 70 to 80% at a higher cost because of the higher market of shipping as of now.
Okay.
The guidance is always there for acquiring more capex in terms of vessels, but all depends upon the right opportunities at the right price.
Understood. All right, so just one small question over here. Historically, also, I've been noticing that whenever there is a drop, Q1, end of Q1 and Q2 has been the period when we report low revenues. Our gross margins always spike up in these quarters, and otherwise in Q4 and Q1 we report lower gross margins, like if I talk about vitamins particularly. What could be the possible reason for that?
Can you repeat the question again, please?
Yeah, so just wanted to understand wherever there's a drop, Q2, considering that's the lowest year-on-year, the quarter. So the gross margins increase in this particular quarter if in comparison to Q4, which is the highest volume contributing quarter.
Yes.
So what could be the possible reason for that?
I don't see any reason in terms of percentage. Allow me to come back to you on this point.
All right, sure.
Yeah.
Also, another question here. Vitamins, it has been seen that it contributes around 3.5 to 4% every quarter. And ship charting business is contributing around 25 to 30%. So do we intend to lower our contribution in this particular business and increase ship charting? Any plans of that sort?
No. See, as I have explained earlier also, both the businesses are complementing each other. So that is the reason that the freight that we were paying to the third parties, that plays a very important role. Logistics, again, coming back to logistics is a very important part of any industry that we are into. So the logistics side, the amount that we were paying to third party, Now, since we have our own vessels in the subsidiary of UAE, we tend to have those income in that subsidiary. And on a console basis, you can see the results.
Understood. All right. Thank you so much.
Thank you.
Thank you. We have the next question from the line of Rahul, an individual investor. Please go ahead.
Hello. Congrats to the good set of numbers. I basically have the question around your charting business. I wanted to take an explanation like every quarter we generate around 25 to 30 to 40 CR from your charting revenue. So what does this exactly, what's the product being charted over here, or can you give certain explanation like what is this particular revenue, how it's coming from?
Thank you. Basically, the voyage that we do in a particular vessel.
Yeah, I got that point. So it's you are providing. You tell that 50% of your volumes of charting of butadiene is done from the own vessels. So only 50% is utilized. Like you only take for 50%, and the rest you outsource it to a third party. So my particular question is then how is this revenue of around 50 CR for 45 CR for quarter 2 and 38 CR for quarter 1 is being generated?
So there is some. I think the point is not right. I have said 50 to 60% we are doing as of now because of the number of set of numbers that vessels that we have. We are not able to fully utilize in terms of volume that we are targeting. But during the monsoons, we have to give it to third parties for on a chartering, say voyage charter or on a time charter, because during the monsoons we cannot bring the product into India to the tune of the volume that we require.
Yeah, sorry to interrupt, but I get that point. But I'm talking about the other quarters like your Q1, Q3, and Q4. At that point of time also, you are generating an average revenue of around 35 CR from this particular segment.
Yeah, we do.
So how do you get this thing? Like, if your ships are fully utilized in bringing the butadiene, then what's the source of this revenue? Like one side you bring the butadiene and the other side you ship different products.
All the bitumen, these are specialized vessels wherein the transportation done only on one side. The vessel goes back empty only after discharge.
Okay. So can you explain this?
For a voyage charter for a charter.
Okay. Then if you can explain like for the other quarters other than the rain season quarters, then this revenue generation is, where do you get this revenue generation from?
If you see the revenues have been on a stagnant, on the same level even in Q1 or Q2. There is hardly any difference in Q1 or Q2. The revenue in the Q1, if the vessels are chartered to third parties to bring the product into India, or if you charter the vessels into any other country, this revenue is more or less remains there because the freight ocean calculation is more or less the same wherever you take the product to.
No, I think you are not getting my question. Okay, we can, connect later if we want to.
Yeah, you can please mail. If there is any disconnect, you can please mail your question, please. We'll be happy to mail you back.
Yeah. And the second question is, what's the average cost of around 5,500 we can take for the forward guidance that around 60 crore will be the average capex for a ship?
Yeah. If you have to take a vessel carrying capacity around 5,500, today the cost would be around 65 to 75 crores.
Okay, and this is a used vessel, and does it have an average life or usage life or something like that? Or
any vessel, we have a vessel which is a 27, 28-year-old vessel as well in the fleet, and the current vessel that we have taken over, it is 13 years old. So easily 14, 15 years from now.
Okay, so that's not an issue.
Wherein the vessel can do for 40 years. Any vessel can do 40 years if you maintain properly.
Okay, so makes sense for you to do this. And just a last question, where are you prominent more into the volumes, like the western side or central, or, I know that eastern side you are not that prominent.
We have volumes from all the parts. We have from Gujarat, Maharashtra, Karnataka, Telangana, Haldia. So we have from northeast. It is balanced. Sometimes it's a few percentage here and there in a particular belt, but more or less the demand is there across all Indian states.
Okay. Do you have any preference? You are pan-India preferred. So I see you have storage / or manufacturing plants all over in
terms of preference in storage, in terms of storage would always be a port wherein you can have a storage facility. In the mid states wherein there is inland, there is no water, you cannot bring any imported product in bulk. So any port location would be ideal to store the product, to bring the product and distribute.
Thanks a lot for the answer.
Thank you so much.
Thank you. The next question is from the line of Tanvi Jain, an individual investor. Please go ahead.
Hello, sir. Congratulations on a very good set of numbers. My first question would be if you could just give me a rough idea about the margins that are coming individually from the shipping business and from the bitumen business. Earlier, we had the margins of around 28% in the shipping business, but you said it's not sustainable because we've been giving them for alternative use. Whenever we find a better pricing to third parties, we give it to third parties. If we have a better pricing to us, we'll keep it to us. So what are the sustainable margins in the shipping business and in the bitumen business individually?
Thanks. See, today the shipping market is very good. So we have last 5 years we have maintained a minimum margin of 20% in the shipping side, which is constant on the last 5 years basis. And if you on an individual basis, around 10% in India, around 7 to 10% in India.
So 7 to 10% would be for the EBITDA margin in business?
Yeah. Yes, EBITDA margin individual basis.
Okay, and shipping would be 20%, unlike 28% that we reported earlier.
Yeah, it depends upon cycle, season to season, but on a year basis, if you see, that would be the optimum level that we can talk about.
Okay, so 7 to 10, somewhere between 7 to 10 for the bitumen business for the full year and 20% for the shipping business for the full year.
Yes.
So
yes.
also, out of the total volume that we've done in the first half year, how much was the volume from our own vessels for this first half year?
I have already said that. It is around 60,000 tons from the own vessels.
Okay, sorry, I just missed that.
No worries. Almost 1/3 of the total quantity that we have done in the first half.
Okay. And in the previous Concall, you said that the 8th vessel, we will start getting the benefits from it in future. So have we started commercializing the...
Yeah, 8th vessel is already operational.
Okay. And so one more thing. So when we talk... I'll just join in this question queue.
Sorry?
I'll just join in the question queue again.
Yes.
Thank you. The next question is from the line of Abhishek Sharda from Hem Securities. Please go ahead.
Thanks for the opportunity and congratulations for good set of numbers. So my first question is regarding margins only. So we have shown a significant improvement in operating margins in this quarter, both on sequential as well as YOY basis. And in the second half, our volumes will be almost 2.8 times as based on our guidance, right? As compared to first half. And we have mentioned that with increase in volumes, our operating margins will also increase.
Yeah.
So our margins in the second half should be better than first half. Is this understanding correct?
Yes, because the higher the volumes, the better realization you will get in terms of selling the product. Thus, higher margins.
So, sir, we can expect better margins in H2 as compared to H1 of FY24, right?
Yes, definitely, yes.
Of the bitumen margins. And
yeah,
regarding...
and on the consolidated basis.
On the consolidated basis also. And,
yes.
sir, I have one small doubt. If we come to, if we look at slide number 9 of your investor presentation, there is a part vessel utilization, right?
Yes.
So basically there are three, you have said that 4.24 lakh volumes you have done in 22-23 and 2.01 is done by our own vessels, right?
Yes.
So it's almost 50%, 45-50% is done by your own vessels.
Yeah.
So how much actually total volumes is done by your own vessels? I mean, which will include, so total volumes will be 2.01 of your own and something of the third party also, right?
Yes.
So what is that number? Can you share that number also?
Yeah, if you consider 5 lakh tons, so around the same calculation will go around 2.5 lakh tons, or between 2.5 lakh tons to 3 lakh tons would be done through our own vessels, and balance would have to be done through third party.
No, sir, that I understand. So basically, I want to understand that if we use our own vessels only, we will be like out of 5 lakh, we will be doing around 2.5 lakh, right?
Yes.
And other than our volumes also, so our vessels will be like transporting other volumes also, now, like volumes of other third party also.
No. See, if we are using it 100% for our own vessels, still you fall short of because the transit time is also has to be considered. It is not necessary that 54,000 tons that we have capacity, it is in transit every time. You will have maybe 20,000, 25,000 in transit, another 20,000 for loading or waiting for loading. So it is not that 50,000 will be entirely coming in a month and going back, then coming back. As I said, in the eastern side, I require around 35 days for one voyage. So a vessel of 5,000 tons would do only 6 trips in the entire year, or about 7 to 8 trips.
Okay.
So that would be the guidance, because eastern side takes double the time than the western side.
Right. So basically, sir, if our total capacity is around 50,000 in our vessel capacity, so we'll be doing around 5 to 6 times of the volumes of that capacity.
Yes.
And sir, that 5 to 6 times includes our own like bitumen and other party bitumen also, or we use vessels for our own bitumen only?
This we are talking about our own quantity.
Okay. And sir, I want to understand how much actually volumes are transported through our vessels, which includes our own bitumen and other party bitumen also. If I may
60,000 tons was done through our own vessels in the first half.
Okay.
Approximately 60,000. Maybe a few tons here and there, but approximately 60,000 tons.
Okay. Okay, sir. Thank you. And sir, any volume guidance for FY25 also? Like you have already mentioned, around 18% volume guidance for 24.
Yes, that would be the guidance as of now. And better guidance I would be able to give you after the completion of the Q3 maybe.
Okay, sir. Thank you for the detailed responses and all the best.
Thank you so much.
Thank you. As we have no further questions, I would now like to hand the conference over to Mr. Ramadhan Rane for closing comments. Over to you, sir.
Thank you, Darwin. On behalf of Hem Securities Limited, I thank the management team of Agarwal Industrial Corporation for giving their time and responding to all the queries in a detailed manner. I would also like to thank all the participants for joining the call. Now, I would like to hand over the call to Darwin for the closing remarks.
Thank you. On behalf of Hem Securities, that concludes this conference. Thank you all for joining us. Yes.
Thank you so much.
Thank you. Thank you all for joining us. You may now disconnect your lines.
Thank you.